plan accounts. They've hit an all-time high of more than 5.5 crores. In fact, the SIP flows have been more than 12,000 crores for 2 consecutive months. And the ones that we're looking at are May and June. In these consecutive months, those numbers have really hit a high that we haven't seen in the past. This data, though, seems to be in stark contrast to another piece of data, which is Demat accounts. Demat accounts in India this year seem to be on the path to diminishing growth. At the start of this year, when you consider Demat accounts, there were 34 lakh new accounts that had been added. This addition of new Demat accounts has gone down steadily since then. It's come in at 18 lakhs if you look at the number in June. Let's do some number crunching here. For that, Shomit Sarkar is joining us. My colleague here has been looking at these numbers, both on the SIP front and the Demat account numbers, and he's here to put it in context. Shomit.
Well, if one looks into the SIP and the Demat data, that Demat account opening data that we have been looking, earlier trends were showing a strong growth in both SIP flows and new Demat account openings also. But recently what we have been seeing that is that the SIP flows have been consistently improving and stabilizing, but the new Demat account openings have been on a lower trend. In fact, if you see for the SIP data, firstly, if you see for the last 6 months on an average, it has remained stable at close to 12,000 crore rupees SIP flows every month so far in the calendar year 2022. But for the Demat account opening on that side, if you see after touching a peak of around 3.5 million, there is a Demat account addition that we have seen in the month of October 2021. It has been continuously dropping, and in the month of June, if you see, only 1.8 million new Demat accounts have been added, which is the lowest since Feb 2021 that we have been seeing. And this could be because of the volatility that we have been seeing in the market. That could be one of the factors behind this lower Demat account opening. So earlier trends did suggest that there was a strong correlation or strong relation between SIP flows and Demat account additions. But recently what we have been seeing is that the Demat account additions have been much slower, while the SIP flows have been continued to remain stable as of now at a close to around 12,000 crore rupees on a month basis.
Shomit, thanks very much for that. Let's get more perspective with Market Expert Ajay Bagga, the Chairman of Elyments Platforms, joining us to help us understand this trend and what it really spells for Indian investments right now. Ajay, AMFI, the Association of Mutual Funds in India, is saying that systematic investment plan accounts in India, they're at an all-time high. Monthly contributions towards SIP, they've also kept pace more or less. It's happening at a time when inflation has hit us in a big way. The pandemic has taken its toll on several sectors of industry, service, manufacturing, wherever you look. Startups have been having it so rough. There are pink slips, layoffs happening there, and that's become the order of the day. We've also have a scenario where we have rising interest rates. The rupee has weakened a whole lot. We've had a mixed start to the monsoon. There's rising retail inflation all over the world, and that doesn't leave India as an exception. What do you ascribe as the reasons for the rise in SIP accounts right now? How are they standing in comparison to other investment avenues that people have? Because on the face of it, really, retail appetite for equity funds seems pretty robust from where we are.
Yeah, absolutely, Vikram. Thank you for having me on your show. See, overall, SIPs for the last 3 years have been on a rising trajectory. People have made money also, and it's a very convenient saving instrument where literally you fill it, shut it, forget it. You can automate your savings. There is an automatic debit to your account and it goes into the mutual fund without any additional work at your end. And with the active management as well as ETFs being preferred in the SIP, we are seeing this growth coming up. Now, how is it with respect to the other saving instruments? See, still mutual fund penetration is small in the country. So if you take this amount on the overall 25-26% of GDP, which is the gross domestic savings of India, then it's not that large. And that also gives you a big runway to keep increasing this. So this will keep going up. People have got into this habit of saving through mutual funds, through SIP. And it's something because of the rupee cost averaging principle. It works for the investor because they buy more when the prices are down and they buy less when the prices are up, because it's a fixed amount which is getting invested on a monthly basis. We would like to also know how many are unique in this 5.5 crores of SIPs. So there could be people with 2 to 5 SIPs. So unique numbers will probably be 2 crores or maybe a little more than that. So again, if you compare it to the entire working age population of India, and within that the affluent and the mass affluent class who could be mutual fund targets, I think it's still very low penetration, and that gives the huge potential, Vikram, to grow.
The potential is in the fact that we haven't penetrated our markets enough, is your contention. So we are seeing a spurt in SIP accounts, which are growing. In contrast, Ajay, how do we understand the diminishing growth in Demat accounts? At the start of this year, there were 34 lakh new Demat accounts which had been added. And this addition of new Demat accounts has gone down very steadily since that time. In June, it was 18 lakhs. So why do you think that's the case?
Yeah, and again, if you just see it across the last 3 years, while SIPs have been growing consistently, Demat really just took off from about 5 million 3 years back. It came to 15 million per year. Then it went to 30 million per year last year, FY 2021-22. So nearly 3 crore Demat accounts got opened in the year. And now we are seeing a slowdown. 3-4 reasons for that. One, the IPO market has virtually ground to a halt. Very few issues coming through. Second, over the last 1 year, a lot of the IPOs people have lost money in. So some amount of shakeup in the market. The third is the work from home that was happening that led to this global Robin Hood phenomena of new investors, new traders coming into the markets and opening trading accounts, opening Demat accounts with that. That has slowed down with the mobility, with people having to go to office. That time has reduced. And fourth is the volatility, what you mentioned at the beginning of this segment. Basically, a lot of the retail money was in small cap, mid caps, and those have taken the brunt of the correction in our markets. For nearly now 12 to 13 months, our markets have been negative and not given returns. Trading as such is a very difficult art, and nearly 1 out of 4 traders actually make money. And on a consistent basis, in amongst retailers, 96% lose money. A lot of global research has shown that. So probably it's also a function of the IPO market, of the volatility in the markets.
Yes.
And finally, it's also showing up in the cash segment on the bourses, Vikram. If you see,
yes,
over the last 2 months, we have seen a 30% reduction in the cash segment trading on our bourses.
So all of these are factors, and you do point out volatility, which we've seen a lot of. Of course, there is the persistent FPI selling, the uncertainty in global markets, and perhaps that makes investors tentative as well. There are recession fears which add to concerns. And yes, we have seen the last time we saw a surge in SIP accounts, Ajay, there were scores of millennials who are entering the equity and mutual fund market. So a lot is changing. But in this changing scenario, which equity or growth category, whether flexi caps, large and mid cap funds, how are they doing? Because they seem to be the top 3 in terms of net inflows. But now when you're suggesting to investors, what exactly are you saying? Because risk-taking ability right now is slightly limited.
Yeah, it does impact. But again, SIP is such a wonderful product that you can tell investors that if you have the surplus, focus on your goals, don't focus on the market. And because of the rupee cost averaging, you are getting diversification, plus you are buying more. When the market is going down, that same rupee amount is getting you more units of the mutual fund. And the mutual fund industry has done a good job of that. The distributors selling the mutual funds have done a good job because people have stayed. If you see the attrition rates in the SIPs, those are not very high. And new people are joining because it's a very convenient product. Last 1 year, on a gross basis, markets have not performed. You would have lost about 2 to 3% on a year-on-year basis. YTD basis from January, of course, we are sharply down, maybe 8 to 12%, depending on the index and the kind of fund. But the good thing is in the SIPs, as the markets have gone down, people have bought more units.
True.
And at every raise, they will see some kind of profit. So SIPs tend to outperform the gross market returns, Vikram.
Which is exactly what we are seeing at this point in time. Ajay, it's such a pleasure talking to you. Thanks so much for helping us understand the trend as it stands. And of course, we'll keep touching base with you to see how this trend changes in these volatile times. We'll take a very quick break on this edition of India Tonight. When we return, we'll talk about the Ministry of Consumer Affairs now saying that there is a requirement, a mandate on ISI mark on all